Good evening, ladies and gentlemen. Today is the 22nd of April, the weekly expiry. And yeah, we came into the expiry with heavy bearish sentiment. The view also was that we would have a dip at the open and that dip would get bought. Unfortunately, the dip got bought far more than what was in line with my expectations. So it wasn't particularly a great day for me. It wasn't a bad day either. After charges, it should be just slightly in the positive or break even. And the idea behind today's trade, I think more importantly than the trade, should be the psychology. So my initial trade, due to some slippage and exiting at bad prices, I was down about 10 points. And I've noticed that over a period of past few days, I'm starting to get slightly frustrated with the nature of how market is, which is completely natural. And to deal with that, and to deal with the fact that I was not in the best state of mind, I really risked off. I really risked off. I didn't trade with the intention of, okay, I've lost X points, I have to make back X points or anything of that sort. I just took a trade which I knew would require very little management, if any, and closed the day with slightly break even. But I think what has to be the takeaway here is, and I've been having a lot of conversations with people who talk to me in the group, is that which strategies work, which follow, which particular systems work, this, that, whatnot. I think we are fooling ourselves if you think that it's strategies and systems that make money and that's what basically helps you survive in the market and make a career out of it. Absolutely not. I think understanding your own self in a rational way, knowing what state of mind you're in at different points of time, knowing when is a good time to trade, when is not a good time to trade, especially when you know that you've either been experiencing a lot of success or a lot of failure lately, is what is important. So I hope you have some takeaways from this video, and thank you so much for watching. I will see you tomorrow.
Want to meet like minded traders and discuss option strategies, adjustments, and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. The time is 9:11, and today is the weekly expiry, and the pre-market is indicating a much better opening than what one would have expected after looking at Nifty futures yesterday on the SGX trading with making a low of something like 1450. My idea for today is as soon as we open here, there should be a big sell-off. So we should see a big dip right at the beginning. And this will come more or less because a lot of people with longs will be very afraid. They would have bought on Tuesday thinking that it's the swing low and there's a high chance for an up move from there. And a lot of those longs will get unbound right off the bat. So using that down move as an opportunity to sell the 13,950 or 14,000 put is the plan, and also to compensate, probably selling the 14,300 to 14,350 call depending on what is the pricing at that point of time. The idea for today's expiry will be to kind of risk off, and once again position sizing will be lower than what it has been in the past. So we'll keep you posted. We have about 3 minutes left for market to open. The idea will be to have a very low risk spread because lately markets have been extremely treacherous, and especially expiry days. Okay, the time is almost 9:40, and currently have entered the position for the day. Very straightforward idea. It is that rices will get sold into, and also I have two separate risk spreads. So one strangle, which is 300 points, which currently has 28, 29 points of credit, is 14,000 and 14,300, and the other is 13,950 and 14,350. Idea for today is to be very nimble, especially in case there is an up move more than a down move, because we have far more room on the put side and very little room on the call side. This is currently a slightly bearish view, and yeah, more or less the idea will be if we start testing 14,260 to 70, then we'll have to roll up the calls. If we head below 14,200, we'll not have to do any adjustment till about 14,100 on the downside, at which point we'll be risking off. So I've just entered. We'll keep you posted as the day progresses. Bank Nifty gap down, showed some strength from there, headed up to 3,800, and then being sold into from there. So anyway, that being the case, right now OI data is not going to give us much. We're going to have to wait till about 10:30 to get anything from the OI data. There is a good amount of put writing at 14,200, but a larger amount of call writing at all high levels and put unwinding at high levels. We'll have to wait until we're able to make something of it. Okay, I had to make a change because we're now holding strong. I got out of the 14,300 call and shifted to the 14,350 call sold and have moved the puts up to 14,100. The idea is there seems to be some sort of stability in Bank Nifty above 30,800 and Reliance as well, making an up move back to 1900. So that being the case, I have risked off on the call side. Now the calls continue to expand and the puts are not particularly decaying. So we are in an IV spike, and right now the best thing to do would be to just wait out the IV. So currently, what is the margin used for this? The margin used is about 1.6 crores, and yeah, my full margin to me will be available only post Monday or Tuesday. So we'll keep you posted. Right now, currently sitting in an IV spike, so not much to do, but to just hold the position as is. Will not be making any adjustment until on the upside until we start testing 14,300. So we'll keep you posted. Okay. Calls keep expanding. Calls are not pricing in up move, but we're getting short covering up moves. It's kind of starting to get annoying. So I've just risked off the entire position by moving it just really wide to moving the puts down to 1450 and moving all the calls up to 14,400. There's about 23 points in this, and 23 points gets us to better than break even at the end of the day. And the idea is just I'm going to hold this position and just set a mark to market stop loss of what amount to basically another 8 points from here. So either 8 points we lose or 23 points we make. That's the spread I'm taking. And I'm not going to break my head too much today with what's happening on the OI front, yada yada. It's changing quite rapidly, and calls lately have just been very underpriced. Seen this far too often. Calls are not pricing in the appropriate risk, and there's a panic covering. I had once again some very bad pricing on exiting the 14,350 call. The thing is, I place a large order at once for more than 200 250 lots. It gives me 3-4 points of slippage, which is just ridiculous and annoying. So yeah, this is more or less the plan now. We have an 8-point mark to market stop loss, or we continue holding the position. We're just taking a look at the OI as well at this point of time. 14,000 put has immense strength, and a lot of strength built up this morning at 14,200 as well. 14,300 should be the ceiling. So the most likely expiry is between 14,200 and 14,300. But that's natural considering that's basically where the spot is at this point in time. Markets have been volatile, so that's why risking off at this point makes a lot of sense. Okay, so here is where a little restraint comes in handy and is important as well. Currently, the 14,250 short straddle is worth 120 points, and it's a very attractive trade because there are immense amount of positions building up around this, and this is worth 120 points at 11 o'clock with an expiry today. So that gives a massive upside and downside break even. That's 14,370 on the upside, on the downside till 14,130. So it's very attractive, but it's a trade I cannot afford to take. The reason I cannot afford to take that is my definition for today's risk reward initially was different, but now from my current sizing, I'm down about 10 points. With the rate of volatility lately in the market, you might not be able to even hold this position to expiry. This position has very high chance of being profitable and quite profitable towards the end of the expiry, but you might not have that chance. If we see by chance like a 50-point short covering move, that is going to lose you 30-40 points, and it's not a risk that I'm willing to take, because it'll be like, okay, let me convert some of this to a short straddle position, but that would be the wrong move here. So currently my risk reward is very well defined. I'm not willing to lose more than 20 points for the day. And yeah, and currently I'm down about 10. And if everything goes more or less according to this range, then by the end of the day should be up something like 8 points, which is completely fine. Not right now from here trying to say, okay, my risk is lower. Technically 28 sounds really bad, but that's because my initial trade went wrong. Now one of the first things people are like, okay, I need to make all that money back and more, and this is a great trade, find reasons and justifications as to why it's a great trade and enter it. But here is where capital management comes into play, and something that's really important for everyone to note. Okay, the time is 11:59, and what I've done now is, with the continued up move now putting us in the green at 14,300, I have squared off the 14,400 calls, even though they're very far away, squared them off and sold the 14,450 calls. I do not want to take any risk now. Basically, what is up for the grabs? There is 15 points and 3 points for the hedge. Also squared off the hedge of 14,500 and moved it to 14,600 just to get an additional 1.5 points from there. So yeah, now keeping this 350 point range. There's about 3.5 hours to go, and I don't see me making any further changes to this. From here, it'll either be stop loss or expiry in this range. Okay, 1 o'clock, only one change. We continue to trend higher, but our range is so large that these calls aren't really doing much. And I've moved up the puts to 14,150, taking slightly more credit because the 14,100 puts basically have no value anymore. Time is 1 o'clock, and keep you posted. Okay, time is 1:50. We've got 1 hour 10 minutes to go for averaging. There is massive put writing at 14,200, and these calls are now just 75 points away, but trading still at a very low value. A quick 20-30 point up move can basically double these calls, which can be very dangerous. Regardless, the idea is still the same. Now market stop loss has been reduced. The idea is not taking more than 10 points of negative for the day. So currently this spread of 14,250, 14,450 is trading for something like 15, and if it expands to any point, let's say 20, then we'll be getting out of that spread more or less. So that being the case, we'll keep you posted. About an hour left to go. Looks like there's way too much negative sentiment in the market, and that is played out in the form of massive buying from the dip, which makes sense because positionally speaking, this is a great opportunity to have long positions from below 14,200. But yeah, it was always going to be a tricky expiry. Okay, the time is 2:20. Only change that has been done is 14,300 put is extremely strong, and I have to manage the fact that these calls are just hovering 50-60 points away at each point. So to take in a little additional credit as well, have moved up the puts to 14,300, and this should be the last and final position that we sit on. Currently trading at 14, and stop loss criteria will be 20 on this spread, so it's 150 points, and more or less right now puts are 85 points out of the money. The idea is to just trail in to the final thing. Currently for the day, down about 3 points or so. Okay, so we have about 30 minutes to go for averaging, and what I've done is squared off the 14,300 puts and moved them to 14,250 because I don't want a slide to really expand them. They were basically more or less at the same price that I entered them earlier, but now since the calls have come down, I no longer need protecting that, and I mustn't get greedy. So there is about how much left here? There's a little bit more than 6.5, 7 points in this triangle itself, and the hedges are going to lose about 1.3 points. So effectively, I can say about 5 points for the day is what I'm going for with this. there is I'm going to set a stop loss on this triangle of let's say 12. We'll have to do it mostly because of the volatility. It's a very high probability this thing, but yeah, shouldn't be getting stopped out unless it's on the call side. So we'll keep you posted. Time is 2:30, 29 minutes to go for averaging, and currently down about 1.5 point for the day. We wanted to completely get out of the way of the train, so exited the 14,450 calls. It's far too risky to take up that kind of short covering face up against you, and I moved it to 14,500 calls sold, and just moved up the put to 14,300, which now seems more or less an impossibility. And there is 2.5 points in this and 80 points on the hedge, so that's more or less going to be the last position of the day. This should more or less make us break even by the end. Okay, we are into averaging 4 minutes in, and basically move the calls back down and the puts up to create a 100-point range. I did this just as averaging started because looks like it's one of those days where we're going to have a picture perfect 14,400 kind of an average finish, maybe slightly higher. We are just at this point a little more than half a point down, and what we will be getting from this is, from the triangle itself, we should be getting about 2 points and should be paying half a point for whatever is remaining in the hedges, and should more or less today's charges will be something like half a point as well. After charges should more or less end in the positive. Yeah, there are many things that happened today, but basically what I find is that this is not to do with the market, but more to do with your mentality at any given point of time. I was feeling frustrated with the way some of the past few trading days have been going, and really not in a state of mind where if you watch some of my earlier videos, I'm trading expiries with a 50-point range, 100-point range, and managing that. But when you're not in the best state of mind, don't take high risk trades. I took a trade in the morning which backfired a little bit because of slippage, and after that I did not want to take on any more risk. The previous expiry, I had a bad expiry, and I don't want to sort of revenge trade or try against the market to see what can be done. So I think there are many things to consider here, and most important is psychology. If you are not in the state of mind to trade, like for example today at the end of the day was more or less a wasted expiry, and you can consider this break even. It doesn't make be ending up 1 point for the day isn't particularly some kind of achievement, but at the same time, not being down is really important. Not losing money when the view is against you, and a bearish view, the whole world had a bearish view, and that's exactly when things become positive and that's exactly when the whole market is shorting the market, and that's when the market rallies. And yeah, certainly was not in line with this sort of an expectation for the expiry, but regardless, took off the risk completely, removed any form of risk from the position, and just trailed towards the end and tried to exit, not to make money back. The intention behind the trade was not making money back. It was just have something that is far less far less difficult to manage. One more thing that I'm finding is that as I'm increasing the scale, obviously a lot of people asked me initially on my previous position size, how are you so comfortable managing it? I had been doing that for a long enough period where I'm comfortable managing it. With the larger scale, I think the idea will be I will start spreading my risk reward much thinner, because now in another 2 days I'm going to have all of my account margin available, and the idea behind getting all my margin in one account was to scale up intraday. But the process of scaling up is going to take a while, and I shouldn't rush into it. I think I'm inhibited by technology as well as not having the mental psyche to handle 1,000+ lots of Nifty on each leg. And I mean, the biggest problem I'm facing right now, the biggest reason I'm finding myself taking some damage is slippage. If I place an order, I'm moving the market for myself by 10-15 points at times, and it is not something that it doesn't work the same way if you were doing intraday trading with a smaller capital. So that being the case, more or less should be in the green now. Yeah, barely in the green, and will be ending with slight positive after basically break even after charges, maybe slightly better than that. I'll keep you posted. Okay, should be getting auto squared off any second now. I think after charges should be slightly in the positive, slightly in the green. That being said, yeah, it's sort of like a picture perfect 14,400 average finish, which is great. Like you would have seen me a lot of the times. I try to take a short straddle into the close with what I'm expecting to be the expiry spot. I'm glad I didn't do that today because I was really not in the state of mind to be doing something like that. And yeah, interesting day. Interesting day. I think everyone was far too bearish on the market, and that played out just as you would expect when everybody wants to short sell the market. Yeah, that's more or less square off by zero. Da. I wonder if there are any buyers. Oh, there are. Wonderful. Okay. Yeah. Regardless, it was an all right day. I think today was one of those days where you just focus on the trend and you would have done perfectly all right. It's very interesting to see an expiry with a one-way trend, not something we are used to in the past few days in the market. And yeah, thank you so much for watching. I'll see you guys tomorrow. Have a great evening.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram, and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab, so do not forget to check that from time to time.